Today is Sunday, January 16th, 2011. Looking at a chart of the S&P 500 cash, and this is a 10-year monthly chart. So trying to keep analysis here as simple as possible, starting off the higher time frames, trying to get a good grasp on what's going on the higher levels before working down to lower time frames and trying to form a trading plan for next week. So pretty much here it's been higher swing highs, higher swing lows, and lower time frames. But even on the monthly chart, you can see here that buyers are pretty much in control here. Sellers really have no push. On the last couple months here, there's been no downside at the beginning of the month and just a straight push up. So it looks like the next logical level of resistance is going to be this level through here. Again, this is roughly the 13-15 level, and that's still quite a ways away. So between now and then, I would imagine the S&P keeps pushing up. A lot of people are getting short here, and they're day after day they're getting squeezed as we make new highs. So it's important to keep with the near-term trend in the market and look at these longer-term time frames and longer-term candlesticks to try and figure out when the big money is really getting short and not just trying to pick tops. So going to 5-year weekly, pretty much the same picture. You can see that we've had many weeks up in a row here. All sorts of indicators will tell you we're overbought, at these levels. But again, the market continues to move up, and price is what really determines that. So it's important to keep that in perspective. Same story here as we go down on levels. Again, day after day, breakout. Again, here this was a nice pullback last week. Got a couple of long weeks to the downside, and again, buyers really took it to the upside. So one thing you'll notice here is every time we have a breakout, usually there's a little bit of consolidation that occurs before we do continue up. But again, here there's no reason why anybody should be bearish, as we are continuing to make higher swing lows and higher swing highs. And 20-day, 30-minute chart, again, you can see all the way through the end of the day on Friday, there was buying all the way through the end of the session. So we do have these swing points like we've been talking about quite a bit here, really trying to hammer this home, because there's been so many times where I've been caught on the wrong side of this market, and it's really a bad spot to be. And eventually you learn, but if someone's really showing you, it makes life a lot easier. So you can see we have these higher swing lows coming through here. We have an equal swing low roughly, but again, there's really no breakdown here. So this is going to be where stops are in the near term. But again, even on the daily chart, it's very tough to go short until we see some sort of a significant selling pressure in the market. So pretty straightforward here for next week. In my opinion, of course, we're overbought, and at these levels, I prefer to day trade as opposed to swing trading, because nobody wants to get caught holding the bag when the market does finally drop. So it's important to keep that in mind and take your positions accordingly. Next week should be interesting, but I really don't see anything significant that'll actually change the overall trend of the market here. It seems that buyers are really in, and they're here to stay for a while. So we'll see what happens. But good luck trading. Thanks for watching.